G'day folks, welcome back to Pete's Investing. It's September 20, 2023. This is a US S&P 500 update. First off on the daily, just a couple of things to notice here. In this little range here, you can see there it's bouncing around the 50% level, and that wick went as far as the 61%, and that 61% Fibonacci is always key. If it breaks below that, we're going to see further declines in the price. Now, I've been projecting a decline in the market, the S&P 500, for some time now. You can see there's a bearish divergence, which is still in play on the CCI. If I zoom in, you can see there it's still declining. And that was against that bullish movement on the price. It hit this resistance at 46.07, and it's been sort of fluctuating in that range now for a couple of months. Now we've still got a bearish outlook on this. Again, if you look at the longer term, if it breaks below this, the first level will be this first little range here. If it breaks below there, then this next support level at 43.36 is key. And if it breaks below that, then we're going to be looking out for a further decline in this larger range. If I zoom out, that between that support and that resistance, you can see there the 61% is down around the 41.10, 41.15 level. So first things first, let's see what it does in the next few days and weeks. If it does actually keep going to the upside, or if it breaks above this resistance, or if it actually threatens the support level. The stochastic, you can see there, is in the overbought territory, and it's still going sideways potentially and weakening ever so slightly, but still in the overbought, so nothing too dramatic there. And if we go to the hourly, more close up in a micro view, you can see there we did actually project a bearish divergence here. It broke below that trend line, it hit our target, and now if I zoom out between that Fibonacci range, you can see there it's currently resting around the 61% level. So again, that's just a closer look at that smaller Fibonacci range to look out for. Again, for those new to the channel, I do track these divergence. You can see there those little squares are all where the targets were, and they've all been hit. They generally work 90% of the time. Success rate, the target area is usually the closest Fibonacci range for a retrace. Doesn't necessarily mean they're going to have a full scale reversal. It just means a bit of a retrace at the very least. You can see there those Fibonacci, those targets were hit with the closest Fibonacci ranges. And again, you can see here on the hourly, the CCI is still falling off, still declining. There's no divergence to talk of at the moment. The stochastic is also reaching and floating around the midpoint. You can see there, that's from the overbought, and it's been sort of floating around the midpoint for some time now on the hourly. So I'll keep an eye on it. The bigger picture is very important at the moment. See where it's going, if the markets are going to weaken much further, or if they're going to continue to go in a more bullish momentum. And if they do, we need to see one of these two areas breached, either the support or the resistance. So to understand how to trade using the trend trading strategy and or the divergence, support us more on the Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.